All right, happy Monday, everyone. Get excited, November 10th. Wow, November 10th. Let's have a discussion. Let's open it up with discussion. So the 50-year home loan, let me see if I can do let me see if I can poll the room real quick. Poll the room. I don't see the poll option. Oh well, I'm not gonna waste our time with that. All right, so 50-year home loan. Where's the chat? Oh, maybe I have to do it right here. Emojis, notes. What is? Know what that is. Cancel. Oh, the home like it doesn't look like it's happening. All right, 50-year home loan. If you're for it, drop a one. If you're against it, drop a two. If you're for it, drop a one. If you're against it, drop a two. Okay, 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 okay. Anyone else? Anyone else? Are people like, what are you talking about, boy? What you talking about? Okay, Martine Tino. Okay. Reggie, welcome to the room. 50-year home loan. Two for against, one for excited, and yes. Drop your vote real quick. Who wants to open it up for discussion? This is the room right here that's gonna give us some monies. We're gonna create some monies through this room right here because of this discussion here. Because what we're gonna be doing now is we're now educated to speak to our customers. Actually,
How do you guys feel about it? I'm kind of
we
like, I guess, in the middle.
we already voted. You're voting in the room, sir.
Oh, okay, sorry.
One if you're for, drop a two if you're against, and you can definitely open up the discussion if you like. But we want to see your vote first. We want to see where you are. We want to see, do we listen to you or do we go, okay, you're unsure. Okay, unsure. Okay, got it. So sometimes people are not sure because they lack education or they're not clarified. Okay. Hence why a seller doesn't sign. Typically a seller doesn't sign because there's something missing. A seller doesn't sign with you because you haven't presented them enough detail, enough facts for them to commit and say yes. So I don't want the confusion just yet. I want to hear from almost like a debate, almost like red versus blue, you know. The Senate and the House has finally come to a resolution. The Democrats are finally, going to sign, and we might be out of this little issues that we are with the government shutdown. Let's do this. Let's open it up for ones. I want to hear from the ones. Not saying that I'm for the ones though, but I want to hear from the ones first. Joe, if you want to go first.
Yeah, I don't mind. It sounds like a win-win to me because by spreading the payments out, people can now afford housing. Okay, it's you can buy more house for less money, and over the long haul, the banks are going to be making money. You can potentially even lower interest rates from where they are, and I mean, the banks will make their money. The people will be able to buy homes, and nothing says you can't pay it off early or sell the house. Get yourself into a better situation. But it's to me, it sounds like it would solve the housing crisis.
Okay. Next person. Next, Dershan.
I'm sorry. I was going to agree with Joe. That was my sentiment on it as well. There's nothing that's set in stone says that you can't pay it off early. So those were my reasons of saying that it will be better for you to go with that process if it's something available.
Okay, okay, okay. All right, let's hear from the twos.
Good morning, everyone. I'm not too sure about this 50-year mortgage plan, but for me personally, I don't think I feel comfortable being indebted for 50 years to something. I understand from what Joe and Dershan is saying that there's nothing that said you can't pay it early, but I don't think I would feel comfortable with that for me. But again, I don't know too much about it, so that's my thought on it.
Beautiful, beautiful, beautiful. The next number two.
I agree. I agree with everything she just said. But I kind of see both sides. I saw some data about it that from a mortgage lender's perspective, it would decrease payments about $300. But I also agree about the tenureship. We're going
It
from
won't,
30.
wait a minute. It won't necessarily reduce payments by by $50. Not necessarily, not
No,
necessarily.
300, 300. From what I saw, I saw a
Got
video
it,
on it.
got it,
But
got
yeah,
it.
but yeah. As far as like the life of the loan, what Joe and Deshaun were saying, it makes sense. Like as realtors, I do want to get in front of this and start telling people, hey, these are the pros, here's the cons. You can pay it off early, but like as like a, I guess from my generation standpoint, I see a lot of people getting into more debt. That's the only con I see. I don't think people are. Our job really is to really take control of this narrative, because if we don't, as professionals, it's gonna be very bad for the next generation. Because the whole point of home ownership is to one day own the home. But typically now I'm seeing data that shows that people own homes are like close to like their 40s. Like I know a lot of people right now, even my age group, they're not homeowners yet. So if they're buying their homes in 35, 40, and then the loan is 50 years, so that means you'll never pay off the house. You're gonna die and someone else is gonna take over that house. So I think we need I personally think that we need to learn more about this program, obviously, but we need to get in front of it and start teaching our clients, our future clients, like, hey, this is just a means to an end. This is an entry point, but you don't want this to be your end all be all. Do not sit there and try to pay off a house for 50 years. You don't want that. We want you to own the home. We want you to leverage it. So that's just my standpoint on it.
Beautiful, 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 beautiful. So I'm going to agree with the ones for myself. I'm going to agree with the ones for myself. And the reason for that is because exactly what Dershan said, there's no prepayment penalty. So you can always pay your loan off in 15 years, 10 years, 30 years. But one of the one things that it is, guys, is that it's giving buyers the opportunity to now make home ownership affordable. So let's say, for example, I was buying let's talk about my home. Okay, $685,000 home. My mortgage is $5,600. That's PITI, $5,600 on an FHA loan. Okay. So imagine if we were to take that. Let's put it in ChatGPT. Okay. So think about it. It's now giving the buyers access to get into the home. So for example, we mentioned earlier today that the average buyer is going into a property at, at 40 years old, right? At 40 years old. But the reason the average buyer is going into a home at the age of 40 is because it's lifestyle versus actuality. So a lot of us, we rather the amenities, we rather living in Brickell, we rather, not living in the starter home. Okay, back in the days, our parents moved into two ones and our families moved into two ones, and we raised the kids in two ones. Today, it has to be a 3-2. It has to be a white picket fence. It has to be in a particular area. There weren't such things as that back then. So you have to think about it from the whole spectrum. Okay. Now, number two, okay. Now, number two, ChatGPT says if a mortgage today is $5,600 at a 50-year term, it now goes to $5,200. Okay, so there's some savings right there. So now the person that was saying, hey, I can no longer afford a townhome, they could possibly now afford it because there's a $300, $400 savings, But also remember that it's all based on taxes and insurance as well. Another benefit is that they don't have to escrow. You do not have to escrow, okay? Even if you're going into an FHA loan, you could escrow for the beginning of the loan and then turn into a regular loan, which is a conventional loan, and no longer escrow, giving you some more savings. The goal is to get into the home. That is the goal. Get into the home and figure everything else out. If our goal as realtors is to sell the most homes that we possibly can, we have to think of that style, but also as homeowners, people are spending money in rent. I own a property at $5,600 a month, but guess what? I also pay rent right now in the room that I'm sitting in right now at $3,600 a month. 3,600 bucks times 12, that's $43,000. I told myself I'm not moving for the next 3 to 5 years. So if I do that at 3 years, right? That's $129,000. Okay. $129,000 that I could have now put into my home because it was a 50-year mortgage, it was a 30-year mortgage, it was a 40-year mortgage, whatever that was. So is it what the justification is at the end of the day, ladies and gentlemen, home ownership is for the people that want it. Not everyone needs to be a homeowner, not everyone desires to be a homeowner, but people that want to own a home, but they're like, wait a minute, these interest rates are way too high. This is an alternative right here. This is an alternative right here that's going to allow you the opportunity to get into the home that you may want to desire. Because let's say, for example, this now changes them from buying in Margate to now buying in Coral Springs, for example. Okay, this 50-year term now helps them to do that because they didn't want to be in Market. They didn't want to be in Tammy. They want to be in Coral Spring. They want to be in Parkland. You know what I mean? This now gives them the opportunity to do that. And then guess what? The same logic. As rates go down, you refinance. So now I'm in a 50-year at a 7% rate or 6% rate, but imagine when the rates go down to 5. Imagine when they go down to 4. I can still be in my 50-year term. Or what I can do is I can go down when I refinance and say I've been able to now be able to afford this mortgage. I can afford this mortgage at $3,500. I can definitely afford this mortgage at 2,600 bucks. I can definitely afford this mortgage at $3,000 a month. You know what I mean? And now I'm able to refinance as the rates go down, maybe into a 20-year, maybe into a 30-year. I'm going to give you guys a prime example. Okay, my parents bought the last house that they're in right now in 2003. My mother had a 6% rate, had no idea she had a 6% rate. When the market was down, interest rates were 1%, 2%, 3%. I called everyone. I called everyone that I knew and I got them into refinancing positions. Okay. And mother's now at a two. We got a 2 point. I have a 2.6 on one of my properties. She's at a 2.4. She's got a 2.4 on her property. But guess what? She still pays the same exact mortgage that she was paying for the last 20 something years, maybe at the 6%. So what does that mean? That now means that she's going to have the opportunity to pay the house off. Maybe the next 5, 7 years, she's going to be done paying this house off. Okay. But you got to think about it though. This is an opportunity to get people into homes. Okay. What was the number one issue why people weren't getting into homes? Because the interest rates. If we calculate interest rates, they're about the same exact. If I give an interest rate, let's chat GBT it again. An interest rate between a 4% and a 6% is probably the same thing, the $300 right there. So that's probably their tax savings right there that they've been crying about. So let's chat GBT, okay? If I purchase a property of 400K at 4%, what is my mortgage? If I purchase it at 6%, what is? Let's look at the savings right there. This is the savings we've been crying for. We've been saying, man, if interest rates go down, okay, check it out. A $400,000 home at a 4% rate is 1910. A $400,000 home on a 6% rate is 2398. Okay. 2398 take away 1910 is exactly $488 right there. So now you now have an option. So let's say, for example, a buyer was like, Reggie, I didn't want to pay more than $2,000 a month. Okay, great. We have an alternative for you. Instead of putting you into a 30-year, let's go ahead and let's put you into a 50-year. Oh, wait a minute. I didn't even calculate that at 50 years. what would it be at 6% and 50 years instead of 30 years? So instead of paying 23.98 at a 6% rate, they would pay $2,006 versus, okay, so now I'm thinking the math. $2,006 on a 50-year versus a 4% rate at 1910. So 2006 take away 1910 is $96 right there. So what do you want? What do we now have to do? We now have to have the mindset of saying that a 50-year loan is now equivalent to a 4% rate. So that's the rate savings right there. Either they're going to be a 2-1 buy down, they're going to get a 50-year, okay, or they're going to buy down the interest rate. These are now their options. So anyone can choose. You can choose to go into a 20-year if you want to. You can choose to go into a 15-year. I'm refinancing one of my properties right now into a 15-year loan. Okay. You can choose what terms you take. The average, the typical person, the typical first-time home buyer automatically goes into a 30-year, but they don't have to. They can go into a 22-year. Okay. So there's a tax savings right there. So we no longer have to cry about interest rates. We no longer have to say the rates are so high. We can say, hey, Jessica, while the rates are high, we have the opportunity to put you into a 50-year loan, which you can always refinance. Okay. It goes the same story. Date the rate, marry the house, whatever that is. That story's back again. So now it's gonna be date the terms, marry the house, whatever it is. You know what I mean? That's what it's going to be now. Because once again, as the rates come down or whatever comes down, they can refinance. What about this? What about they got into a 50-year? They stayed into a 50-year for 30 years. I mean, for 10 years or 5 years. And then they go and they refinance into a 20-year. They're going to refinance into a 21-year. They're going to refinance into a 30-year. Okay. It now gives them an option to get into a home. It now gives them an option to no longer rent. It now gives them an option to say home ownership is an opportunity. And guess what? If we're still in the same market that we're in right now and it doesn't get flooded, like New York doesn't flood us, other states don't flood us, we still have the opportunity to still tap into the seller's closing costs. So there's so many opportunities. I want to hear from you guys. I want to hear from you guys. We haven't heard from Nicolo. We haven't. I want to rehear from Reggie again because I don't want anyone living here without clarity. I heard CJ has some clarity as well. And then Gina, gonna reset the room. Our topic for today is the 50-year mortgage. Yay or nay? Where do you stand, Gina?
Great morning. Happy Monday. Definitely nay, nay, nay. I hey, it's an option, but I feel like it's also a trap. Because you're going to pay, we already pay, if you do a 30-year mortgage, you're already paying probably double, two and a half with interest, what your house is actually worth. So 50 would make that probably you're paying the bank 4 times as much. Plus, the likelihood with the statistics where everyone is buying their home, they're getting it at an older age because affordability. So they won't be able to finish paying off this home, which can now cause a problem with passing it down through inheritance or um, through a homestead. So I think it's a trap. I'm glad it's an option. Maybe it can. The pro on that is that it can maybe give some people more time to save and pay it off, those who want to get started. But I think mostly it's a con. I think if you save, work hard, buy what you can afford, use your equity later and, get something that you can, grow to your dream home, I think that's a better option for you.
All right, so question. So before we go there, I'm not in agreement with you. But the reason I want to say this is because do you think what we're doing, ladies and gentlemen, is we're creating an excuse right now? Because people that take 30-year loans, are they paying off their houses? The average person stays in their home from 7 to 10 years before they sell it. They gotta upsize, they gotta relocate, they have to downsize. The average person stays in their home for 7 to 10 years. Do you ever hear how many times do you go on social media and you see someone says, "Oh my gosh, I just paid off my mortgage. I'm so excited." We hear people saying they pay off their cars. But we seldom drop a one in the room if you can think someone off your head right now that has paid off their mortgage in the last 5 years or 10 years. A client of yours, a family member of yours, a friend of yours. Okay, Tina. Okay. Anyone else?
The majority of my family has paid off their houses.
Okay, because what age group are they?
They're up there in age, like 40s and 50s.
Because back then people didn't move out of their homes. People did not move out of their homes. My mother moved into her home in 2003. What year is that? 2025? That's 23 years ago. Okay. The average person doesn't move out their home back then. But think about today's society. Think about who your client is. Who is your avatar? Who is your avatar? I own my townhouse. I own my single family. I own another single family. I've moved into two apartments. I moved into an apartment before, another apartment. I'm in my seventh place at 36 years old. Okay. Okay. CJ, are those investment properties or are those primary residence? We're not speaking about investment properties. Investment properties should be paid off. Okay. We're talking about primary residence, your everyday buyer and seller, your everyday buyer and seller. Okay.
But yeah, I agree with you, Joe Jeff. I think
So,
that their
okay, so
perspective that
I did the math. 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 Okay. I did the math. So I asked ChatGPT, what is the average amount of people that pay off their homes? Okay. ChatGPT says roughly every 4 in 10 homeowners currently own their homes outright. But if you focus on the working age between the segment under 65, the group often deals with an active market of buyers who are still financing. Only about 4 in 1 and 1 in 3 have fully paid off their homes. Okay. For seniors 65 and up, between 6 and 10. So the average person right now, 65 or older. So our parents, maybe, okay, maybe our grandparents, 1 out of every 4 person has their home paid off. So that means let's do the room right now. So 1, 2, 3, 4, Dershan has her home paid off. 1, 2, 3, 4, Nell has her home paid off. That means Gina's home's not paid off, Reggie's home's not paid off, CJ's home's not paid off, Nicolo's home's not paid off, Joseph's home's not paid off, Jeff's home's not paid off, Martin's home's not paid off. In this room right now of 9 people, only 2 people in here have their home paid off. Okay.
Jeff, I paid mine off.
No, we're doing a scenario.
Oh,
One,
okay, I got you.
one
I
of the
got you.
4 people in this room right now.
Mhm.
Okay. If we were to say, hey, everyone that has their home paid off, if everyone has their home paid off, out of the 9 people in here, it'd only be 2 people. So now think about it on a wide spectrum. Now pull your closed cells now. So if you have 30 closed cells that you have year to date, if you have 50 closed cells year to date, if you have 10 closed cells year to date, one of those 4 people are likely going to pay off their home. That now means the second person, the third person, the fourth person, the fifth person, the sixth person is either going to sell their home or they're going to live out that 30-year mortgage. But then we go back to statistic number 2. Okay. The average person lives in a home for 7 to 10 years. So really, I think what happens is imagine so think about this. Think about this. When when did 30-year mortgages come out? Hold on. When did 30-year mortgage? They were probably saying the same exact stuff. They were probably against it. They're probably like, this is crazy. This is ludicrous. We're gonna be stuck in our houses. It's a debt trap. They're probably saying the same exact thing. 30-year mortgages came out at what? In 1968 came under was it Carter? Hold on. When did 30-year mortgages come out? Mortgages come out. This is called research. Okay. And I'm in my research phase as a college student, so this is probably why I'm so like industrious into this. But you guys speak. Don't allow me to speak alone. You guys speak. When did 30
Yeah,
just come out?
Jeff, I had a question
I think under
that
Roosevelt.
I saw it was 30, it was 50 years, but still at
90
7%.
years ago. 90 years ago, 30-year mortgages came out. Okay. And it was under President Roosevelt. Exactly correct. So they were probably saying the same exact thing 90 years ago that this is, let's ask ChatGPT. What were the thoughts? What were the thoughts when 30-year mortgages was first announced?
But Jeff,
You know what we're having this
is it
session right now?
still at 7%?
You know why we're having this discussion right now? We're having this discussion right now because you guys are going to have the same discussion with your customers. This is what your topic of discussion is going to be for this week. When I get on the phone and I speak to the buyer, I'm so excited that I have an opportunity for you to own a home, Jessica. I am so excited, Billy, that home ownership is now affordable for you. Jessica, I knew you were going to call me about this. I knew this was going to be a topic that you were going to call me about. And guess what? I'm excited to indulge in this conversation with you. Billy, long time no speak. Hope all is well with you. Question for you. What do you think about this 50-year mortgage topic? This is our conversation, ladies and gentlemen, for this week, right? This is the hottest thing that's happening. This is the hottest thing that is happening right now. So this is what our conversation is going to be when we get into our database and we're like, who do we talk to? Who do we talk to? Expireds. Oh my gosh, your listing expired. And guess what? This might be the best time to get on the market because 50-year mortgages are about to be released. And this is going to now make home ownership more affordable. So therefore, there can be more eyes, more people running into your property. And if you want to roll in New York, coming into here, you could slide that in too. This is the topic for this week. Go ahead, ladies and gentlemen. I'm listening. And then
Jeff,
I
let
got
me
facts. I have the facts for were they for it or were they against it 90 years ago when people spoke about it. And I haven't read it just yet. So this is going to be news to me. It's going to be news to you guys. But go ahead.
I think this is a
Yeah.
great conversation to have because if we can write down talking points for buyers and sellers, because this is what you're going to run into. You're going to run into age demographics. Like the millennials are going to feel what they feel about it, like similar to what me and Gina are saying. And then the other generations are going to feel like what Joe and Deshane were saying. But having these type of conversations, so we have these talking points and just outlaying like the benefits and the different options because that's really what it is. They're not being forced into these options, but it does open an opportunity for sellers and buyers. For like you said, with expires, it gives them an opportunity to for more outreach. For buyers, it gives them like I even look it up like because the loan term got extended, the loan approvals can actually go higher now. So it does open up the floor. It's just that how we're gonna talk it down because people are gonna have their already limited beliefs already about this. So if we could just write that down, like what do you guys think? What are the main talking points for buyers and sellers? So when we do have these conversations.
You know, I really believe that there are definitely pros and cons, Jeff, for the 50-year loan. However, I'm still against it because, overall, a 50-year loan is going to build equity very slowly. And, with the average person staying in their home for about,
Wait.
yeah,
How does a 50-year change the equity that I build in my home?
because typically in a mortgage, you're paying the interest off first, right? So if you look at it from that perspective, in 5 to 10 years, the person would have built very little equity stake in the home. So after 10 years, you would have been paying off much more of the interest than having that equity stake in the property. So even if they want to go and refinance, they're still refinancing a large amount.
But that goes back to us as realtors. That's our job to make sure our clients buy right.
So
That's what I was saying earlier. We need to get in front of this for sure.
I just
absolutely,
have
Reggie. Makes
I just
sense,
have
but
one.
that's what I'm trying to say is that there are definitely pros and cons. I agree that it's gonna make affordability that much easier, but it's also our jobs as realtors to educate our clients so that they can make the best decisions for themselves.
Okay.
Hundred
I
percent.
have one question for y'all. At 20, let's say 23, are we still making the same amount of money that we made when we were 23 versus where we are right now?
Heck no.
And that's what I would lead with when it comes to my clients, because at the end of the day, when you're purchasing something, you're not purchasing with the intent to make the same amount of money over the life over your life. You're looking to expand and grow and be better than where you are. So, and I think that's what, when you really look at statistics and where people are, when I was 23, I was probably never worked at McDonald's, but just to give an idea, kids start out 15, 16 working at these fast food restaurants. And some of us that get into the game a little bit later, we start at 18, 19, and those are some of our first jobs. if you're purchasing and you have the capability to purchase something, even if it's a two partner household, you're not looking to be where you are. You're looking over a stepping stone, a ladder to grow and be better than where you were, when you first originally purchased. But it's giving them the idea that instead of being able to purchase or having to purchase a little condo just because this is what I can afford, this 50 years giving them that stretch so that they can have the affordability early on and be able to keep their house longer than expected. So that's just my take on it. But I wanted to gauge y'all a little bit just to see where your mind is in reference to where you are as far as financially and where you expect it to be in the future.
No, I like it. That's a good talking point because at the end of the day, we all see the prices of homes statistically have been rising, and especially in this market, it's like a no brainer. So pitching it that way, I like that. Like you're not going to be at the same level now that you're going to be in the future. So this is a long game, and that's what
And that's
homeownership
what
is:
Jeff was trying
stewardship.
to really say to us. It's a long game. It's really, your idea was, how do I present this to my clients? It's always to present it. And they don't have to stick with just making one payment. Think about some of us who have 4 kids starting out at 23. You know how much their income tax is and how much of that they can put on their mortgage and how they could bring that down by 5 years just by putting that $7,000 on that payment that they have to make. Think you understand what I'm saying? Think big picture, please, because
No,
it's not.
see,
It's
see, I didn't know that. I didn't even think that far. But these are the type of things that that's what I'm saying that we need to highlight
y'all,
because these are the
y'all
conversations
got to
that's gonna
think.
have.
Yeah,
Yeah.
stop thinking in the negative. Y'all got to think
No, no,
because if
I'm
you
not
you
thinking of negative.
our goal. No. Not our goal is always to lead and be that person that can't see. We're that person that can see beyond where our buyers can see.
100%, 100%.
We're that person. So, keep that in your forefront, that guidance, that direction, because if we don't see it, how can we get them to believe and see it themselves?
Right. And like the conversation we just had about that strategy, those are things that we got to mention to our clients because at the end of the day, it's all about numbers, like Jeff is saying. So if we can present it in a way that they can understand and see the long picture, like you're saying, then this thing is just another option. It's another opportunity. Like it opens up the floor for more homeowners for sure. But these are the conversations that definitely going to be had with a lot of our clients. They're going to have their cons or their fears. But yeah, us as realtors, we need to be able to position them in a way that we're doing our due diligence. You have to get our sales up, but we're also putting them in position to win.
Anyone else? All right.
Well, I
Yeah,
think
when is
it's great that you brought that up because I knew there were more cons. I thought there were more cons than pros, but as I'm listening to you all, I see that the real stance that you need to have is just knowing what it is, what's the pro, what's the con, explain that to your client, have them have that as choices. But as I'm reflecting on all the choices, other than the equity, which was a excellent point by Nicola, it probably is a better situation for clients now to get a home because there'll be lower monthly payments. Like you're saying, Jeff, people aren't staying in their homes longer. So those are great points that we can use the pro can be a, a positive. The con can actually also be a positive too, just depend on who your client is. But just knowing is the point, which is a excellent discussion. Thank you.
Beautiful. We'll pick this up on Wednesday. I want to pick this up on Wednesday. Maybe this is our discussion for this week. And the reason I want to pick this up on Wednesday because by Wednesday, you'll speak to more lenders, would have spoken to more buyers and sellers, we'll tap into more expired FISBOs, and we'll hear from more consumers that actually own homes. But I want to end off with
I
reading the article. Hold on. I want to end off
Okay.
with 840. I want to end off with reading the article of the 1934 change. And the question to ChatGPT was, what were the thoughts when 30-year mortgage was announced in 1934? When 30-year mortgages first hit the scene in 1934, it wasn't rolled out with balloons and confetti. It was more like someone dropped a brand new tool on the table during a national crisis, and everyone started as it was wondering, is this the safe thing? Do we believe that we're in a recession right now? Yes or no?
Yes, unannounced, but yes.
Okay. Do you guys believe that this government shutdown has really impacted the United States?
Yes.
Okay. So now here are the responses. Here is the vibe from back then. Number one, relief from regular mortgages. Most Americans were drawn in old system, 5-year loan, interest only, massive balloon payments, waiting for the storm clouds. So regular families love the idea of a 30-year mortgage, like, wait, I can actually afford a home now. I can actually finish off paying off my home before I die. It felt like someone finally turned the lights back on in the middle of a Great Depression. Number two, suspicion from bankers. Bankers were not exactly popping champagne bottles either. They were kind of worried. They were like tying in their money for 30 years, borrowers defaulting long terms, government changing the entire lending game. Some bankers basically said this is way too long for someone to own a home. Did some of us say this right now today? So this is what they were saying 90 years ago, ladies and gentlemen. Nobody can predict you actually owning a home for 30 years, but the government backed the loans out through what was now known as FHA, which was easier financing. Politicians, number three, politicians saw it as an economic CPR. The Roosevelt administration was trying to rebuild a collapsed housing market. The 30-year mortgage was designed to spark home builders, which is what we spoke about today, stabilize the banks, which is what we definitely need, and let normal families enter into their homes. Remember, CJ? Normal families are everyday buyers and sellers. Politicians saw it as an engine that was needed to restart up the American dream of homeownership. Topic number four. Builders loved it. Homeowners said, you're telling me more people are going to be able to buy homes? Sign me up. Constructions boom because buyers were now settling, having more buying power. Wow, we opened the discussion of today saying more buying power. Ladies and gentlemen, put on our 90-year hats, black and whites, big bow hairs, long dresses. This is what they were thinking about. So this is us. So guess what, ladies and gentlemen? 90 years from today, our grandkids, great grandkids are going to be having the same discussion. Maybe 70-year loans may be out by then. Okay. Number five, last point. Some critics thought that it was way too easy. A few old school voices said this encourages people to buy homes they can't afford. Did some of us say that today? Funny enough, the same debate still exists for today. Should there be 30-year mortgages? Wow. In short, in conclusion, the 30-year mortgage arrived like a brand new bridge tossed across a broken Canaan. Families saw hopes, banks saw risks, politicians saw economic development, builders saw customers, critics saw trouble. But the idea stuck, and now that is the backbone of the entire US real estate market. Most homeowners most homeowners take out loans for 30 years. What do you guys think about that in conclusion? Then we'll go for the day.
Well, the markets, like you said, that was the Great Depression. They needed to get money moving. Money moving creates a very good economy. But if you don't mind, I mean, you're thinking about the 50-year mortgage, but then Florida's also talking about getting rid of the property taxes for primary residents. I mean, this is going to be a boom for us and for people who want to own a home.
Joe, we about to make a whole lot of money.
Oh
Yes.
yeah, looking forward to that.
Maybe we could discuss this later, but what I asked the lender this week was about the topic of them eliminating the 620.
Credit score.
Yeah, for the second borrower.
Mm-hmm.
I thought that was awesome.
Beautiful. Great discussion. I hope you guys all moved in excitement. I'm excited. I'm excited about the nays, the yays. I'm excited about hearing from the people. I'm excited about making the phone calls. I have to drive to Coral Gables, so I'm gonna have a lot of phone calls with people, getting their insight on this. But you all do the same. Take the call today. Nell's definitely gonna put out the recording. So if you guys want to rehear the recording again, hear it a couple of times, so now you can go have your intelligent conversation. This is a live. Y'all need some social media influence. This is a live. This is a YouTube opportunity. This is a branding opportunity. This is an expert opportunity. I would do a home buyer seminar around this. Okay. I would do a live training segment around this. What would I do? I'll do a podcast setup around this. What would I do? I'd bring in a lender. Okay. I'd bring maybe a few lenders. I would host an event. Okay. Invite all my buyers, invite all my renters, invite all my homeowners. Okay. And I would turn this into a training module right off of Zoom. Okay. This is an opportunity to capitalize on. Okay. Billionaires, Millionaires are created in recessions. This is your opportunity to stabilize the market, stabilize your real estate portfolio, grow your net worth, and get to the closing table faster by having opportunities like this. Once again, 90 years ago, we had the same discussion. Some people were for it, some people were against it, but guess what? It's now the norm for today. So while it's still in discussion, ladies and gentlemen, while it's still in discussion, I think we should embrace it. The more powerful energy or positive energy, I should say, that we put out there, the more positive energy that's going to be returned back to us when this topic comes out. But you be educated. You be educated. It's like scriptures. Don't take the Bible. You see, Pastor always says, don't listen to my word. He says, go do your own research. Okay? They always say that. Even the people that are sitting next to you in the church, they say, don't listen to what pastors say. You better go read John. You better go read Job. You better go read Matthew yourself and go get the word for yourself. Don't listen to the people that are trying to clickbait you on Instagram, YouTube, TikTok, whatever. Go do the research for yourselves, ladies and gentlemen, so that you're best educated. And that's what makes you the true professionals. And that's what makes you real estate advisors. With that being said, y'all make it a powerful day. Go make those phone calls, go get some customers, and let's make the end of 2025 the best year yet. Take care, y'all.